Warren Buffett is widely regarded as one of the most successful investors in history, with an estimated net worth of over $100 billion. His investment strategy has been studied and emulated by countless investors and business leaders around the world. Rule number 1: never lose money. Rule number 2: never forget rule number 1. Buffett believes that avoiding losses is more important than achieving gains. He advises investors to always focus on risk management first, and only take risks that are appropriate for their level of risk tolerance. When it comes to investing, risk management is crucial. Buffett's first rule of investing is to never lose money. In other words, investors should always be focused on protecting their capital first and foremost. The second rule is to never forget the first rule, which emphasizes the importance of always keeping risk management in mind. The stock market is a device for transferring money from the impatient to the patient. Buffett encourages investors to be patient and have a long-term perspective when investing. He believes that the stock market rewards those who can resist the temptation to make impulsive decisions based on short-term fluctuations. The stock market can be volatile and unpredictable in the short term. Buffett's quote emphasizes the importance of patience and a long-term perspective. He believes that the stock market transfers money from those who are impatient to those who are patient, highlighting the fact that long-term investors are more likely to be successful. Price is what you pay. Value is what you get. Buffett believes that investors should focus on the underlying value of a company, rather than its current stock price. He advises investors to look for companies that are undervalued by the market and have strong long-term growth prospects. When investing in stocks, it's important to focus on the underlying value of a company, rather than just its current stock price. Buffett's quote emphasizes the fact that price and value are not the same thing. Investors should look for companies that are undervalued by the market, meaning that their stock price is lower than their intrinsic value. Our favorite holding period is forever. Buffett emphasizes the importance of a long-term investment horizon. He advises investors to focus on buying high-quality companies with sustainable business models, and to hold on to them for as long as possible. Buffett's quote highlights the fact that successful investing requires a long-term perspective. He advises investors to focus on buying high-quality companies with sustainable business models and to hold on to them for as long as possible. By doing so, investors can benefit from the power of compounding over time. The difference between successful people and really successful people is that really successful people say no to almost everything. Buffett encourages investors to be selective and disciplined in their investment choices. He advises investors to only invest in companies that they truly understand and believe in, and to avoid being swayed by the latest investment fads. Successful investing requires discipline and a willingness to say no to the latest investment fads. Buffett's quote emphasizes the importance of being selective and disciplined when it comes to investing. Investors should only invest in companies that they truly understand and believe in, rather than being swayed by the latest trends and fads. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Buffett believes that investors should focus on quality over quantity when investing. He advises investors to look for high-quality companies with sustainable competitive advantages, even if they have to pay a fair price for them. When it comes to investing, quality matters more than quantity. Buffett's quote emphasizes the importance of focusing on buying high-quality companies with sustainable competitive advantages, even if they may not be available at a bargain price. In other words, investors should prioritize buying good companies at fair prices over buying mediocre companies at a discount. The stock market is filled with individuals who know the price of everything, but the value of nothing. Buffett believes that many investors focus too much on short-term stock price movements, and fail to understand the true value of the companies they invest in. He advises investors to focus on the long-term fundamentals of a company, rather than its short-term stock price movements. Buffett's quote highlights the fact that many investors focus too much on the short-term fluctuations of the stock market, rather than the long-term fundamentals of the companies they invest in. Investors should focus on understanding the value of the companies they invest in, rather than just looking at their stock prices. In the business world, the rearview mirror is always clearer than the windshield. Buffett emphasizes the importance of learning from past mistakes in investing. He advises investors to maintain a long-term perspective and to focus on investing in companies that have strong long-term growth prospects. Learning from past mistakes is a crucial part of successful investing. Buffett's quote highlights the fact that it's easier to understand what has happened in the past than to predict what will happen in the future. Investors should focus on learning from past mistakes and experiences and use this knowledge to make better investment decisions in the future. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Buffett emphasizes the importance of a long-term investment horizon and being patient with investments. He advises investors to avoid the temptation of short-term trading and to focus on investing in high-quality companies with strong long-term growth prospects. Investing requires patience and a long-term perspective. Buffett's quote emphasizes the fact that investors should be willing to hold on to their investments for the long term, rather than trying to make quick profits through short-term trading. By focusing on high-quality companies with strong long-term growth prospects, investors can increase their chances of success over the long run. Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. Buffett advises investors to invest in companies that they truly believe in and would be willing to hold on to for the long term, even if the stock market were to shut down for a prolonged period of time. When investing, it's important to focus on companies that have strong long-term growth prospects. Buffett's quote emphasizes the fact that investors should only invest in companies that they truly believe in and would be willing to hold on to for the long term, even if external factors such as a market shutdown were to occur. Warren Buffett's investing strategy is based on a long-term, disciplined approach that emphasizes risk management, patience, and a focus on high-quality companies with strong long-term growth prospects. His quotes offer valuable insights into the mindset of a successful investor and provide guidance on how to achieve investment success. By following his principles and staying disciplined, investors can increase their chances of success in the stock market.